So in continuing our talk about money supply and inflation and where it does show up, we're going to walk through money supply and actually where we are in the history of money supply, right? So remember we showed you this chart, consumer price index relative to money supply, no pattern that we can see. And then we talked about consumer behavior and how there was no pattern there. We did show this chart that shows a pattern between GDP and money supply and that direct growth curve. So this next thing I'm going to tell you is probably not a surprise. So if you look at money supply and the growth in money supply, let's just say we calculate it as we would calculate any investment. Let's say we calculate the compounded annual growth on money supply and the compounded annual growth in GDP. So GDP has grown 5.2% over the last 40 years, 1980 to 2020, 5.2% growth. So would you say that the money supply has grown greater than that number or less than that number? And how much greater, right? I don't think anybody thinks it's grown less, right? So we've got this dramatic increase in money supply. It's going to be crazy, like probably double-digit growth is what we're thinking, right? So money supply, M2 in particular, has grown 6.2%. It's right there. It actually plays out in the chart, right? This chart that shows the GDP to money supply as well as inflation. No correlation to inflation to speak of, direct correlation of money supply to GDP. So I suggest that money supply is actually a good thing. It grows our economy. Now, why is that? It's probably because of the classic supply and demand curve. So interest rate determines the price of money. High interest rates, more demand, right? Low interest rates, less demand. So if you have money supply as a fixed number and you have demand as a curve, a low interest rate, this is excess demand for the money supply. High interest rate, excess supply to the demand. And if you're nailing your market, if you're just right on it, you hit right there, right? And it's the ideal interest rate for the money supply and demand. But we've been down here for a long time. I mean, people can't get any yield out of any investments. Inflation's been so low, right? Interest has been so low, rather. So it's likely we were way undersupplied on money, and a lot of data backs this up from back to the 2008 crises. A lot of economists said you'd have to pump $2 trillion in the market to get it back to whole, and we ran at 40% underutilized for decades in our economy before we got back to even, kind of a break even. So this money supply growth hasn't been as dramatic. It's been choppy, so when it has increased, it's felt dramatic. But if you average it out over 40 years, it's not that big of a deal, right? So we're probably just pushing this curve out to kind of match where the interest rates are, get closer to that curve. We probably even have more room to go. So interesting money supply chart that kind of ties everything together for you. Next, we're going to talk about a place in the market where it does show up and we do have some correlation to money supply.